James, what are seller concessions and why might a seller agree to them? So seller concessions is basically a little bit of money, or maybe a lot, that the seller would give back to the buyer. Well, we're going to talk about the reasons for that. But think about it this way. You might have a purchase price of $300,000, or you might have a purchase price of $305,000 with the seller giving $5,000 back to the buyer as a credit. Now, the reason for that in some cases is the buyer may have enough money in the bank to make their monthly payments and for their down payment of 5, 10, or 20%, but they may not have enough money to also pay their closing costs. So in doing this helps the seller get the house sold, but the buyer also to buy the house, as long as obviously the seller gets to net what they need to net. It also can go towards other things like prepaid expenses that the buyer may have to pay towards insurance or taxes up front. Also, what it can do is the buyer can use it to buy down their interest rate. It's what we call paying points or prepaid interest. So in most cases, if you pay 1 point, which is 1% of the loan amount, so the loan's amount $300,000, it'd be $3,000. The buyer is able to decrease their interest rate by about 1/4% in most cases. So again, it's all a negotiation. If the seller can net what they need to net at the end of the day after all concessions, and it helps the buyer buy it, great. Also, we see this a lot with new construction, new builders. They don't want to see a lot of price reductions, but they'll keep the price high and then give more seller credits, or what we call builder credits back. That way, as the builder is building a neighborhood or subdivision, they're not hurting the value of their future sales as well. Again, be open-minded to it as a buyer and to a seller, because it can be a good win-win, as long as, again, as a seller, you net what you need to net.